everyone, and welcome again to Jason's in the House. I'm your host, Jason Parisella with Keller Williams Realty right here in Beverly. Our guest today is Lou Levesque. He is Vice President with Archer Insurance and also in Beverly. Welcome, Lou. It's great to have you on the show.
Thank you, Jason. Glad to be here.
Yeah, excellent. So, as I normally do, why don't you just tell us a little bit about yourself, your company, and what you're going to be talking about today?
Sure. Lou Levesque, as Jason described, and I'm with Archer Insurance on Cabot Street in Beverly. It's a 100-year-old insurance agency. Actually,
really?
A few ticks above 100 now, yeah.
What was the actual year?
It was
100?
03.
03.
1903.
Wow.
So we're climbing. For a long time, it was the Kearns Insurance Agency, and then around the time of the Second World War, transferred ownership to Clem Archer, who's the father of Steve Archer and John Archer, two local business tycoons, as I call them.
A little piece of Beverly history.
Yeah,
there. Now, was it always at that location?
Yeah.
Where you're at now?
Yeah, it was, and we ride the Kearns lineage because it's never not been that 271 address. Yeah, the lobby that now precedes our maze of an office used to be the sole place where a desk sat and you could get all your insurance there.
Incredible.
And then now we've slowly taken over the remainder of the building, and 10, 11 staff members now. Yeah, interesting. 100, very proud of that, actually.
Yeah, I didn't realize that was that old. I knew, I certainly know the Archer family, and I've known it's been there since I was young. But
I'm relatively certain it's the oldest insurance agency in Beverly. Yeah.
Oh, great.
Yeah.
Excellent. So I know you want to talk about just a little bit to make sure our viewers understand how insurance works, as far as kind of a quick disclaimer on making sure people understand.
Yeah. Insurance is obviously a really vast topic. There's so many types. I think that today we'll focus largely on homeowners, maybe how some other policies interact with the homeowners and the property coverages, and not solely just owner-occupied homeowners. We should talk a little bit about investment properties and apartments, and so really the property spectrum. And I think it's really important that no matter what we talk about today, people should really check with a licensed local insurance agent. I don't want a misstated fact here to somehow imply coverage. So I think it's very important to let today to get talking points for the dinner table up in the air, and just fall back to your local agent, or of course reach out to us if you need one. Great.
So that kind of segues into what's the difference between, so you're an insurance agency, then there's an insurance company. What's the difference between the two, and what's the relationship between the agency and the actual carrier?
That's a good question. I actually don't think a lot of people understand that. They see our little office as somehow the skyscraper that backs all the losses.
Right.
It's obviously quite different. I think the thing to look at an agency as, it's almost, think of it like a retail store. Some stores sell a really linear product line. They might sell the Coca-Cola line. But then a larger next door store, competitor of theirs, might have Coca-Cola, Pepsi, Nestle, and the like. It's a funny comparison because it's not related, but the same. We are essentially a store without real shelves. We're offering the products of a handful, or in our case, fortunately, a wide array of carriers who entrust us to represent them and to ultimately sell their product. And that's a really formal relationship. It's called an appointment. We have to apply for and pursue appointments with all of the insurance companies that we want to represent. And it's a pass-fail. It's not automatic. There's a lot that goes into it. So, we too are under the microscope in the insurance world. We have to run good books of business with quality clientele coming through, and it's really a two-way street. So we're essentially the storefront for the larger insurance companies that pay the claims, for instance.
Yeah. So it's not the correct word. It's almost like a real estate broker can show you a lot of different pieces of real estate, different homes in the market, or whatever the property someone's looking for. When you're representing a lot of different carriers, is there, talking from a consumer's perspective, do you across the board send it out to everybody, or is there some insurance company that might give you so-called preferential treatment if you end up securing the insurance with that company?
I get that question. I think different agents would approach this answer differently. In fact, there are reasons for an agency to choose one carrier over another. They're often internal. So sometimes there are driving forces behind why an agency leans a certain way. In our case, we don't really fall to that. We We have in Beverly, as far as I'm aware, among the widest array of carriers. Our appointments, we've got multiple. So when we meet a new client, we do in fact type in their criteria. If it's an auto policy, it might be year, make, model, drivers, where's it parked, what doodads do you have. On a home, year of construction, square footage, ultimately yielding an amount of coverage needed for the home. We pump that info into a rating software that then yields a list of prices. And in almost all cases, we'll lean towards the lesser expensive, the one that costs the least. And the reason is that we only work with the quality insurance companies out there. I mean, insurance companies are rated, and all of ours are up to the task and worthy of our clients' business. So we have the latitude to lean towards, let's face it, it's a consumer's market.
Right.
You know, they're more than likely talking to a few.
Yeah, you hear
agents.
there's so many commercials now where you
Sure.
put the TV on, there's so many ads on insurance.
And that's fairly new.
Yeah,
you know,
that's true. Yeah.
You know, I mean, new to 2008. Massachusetts before 2008 was, on the auto side at least, not a competitive state. Massachusetts told all the agents what to charge for a year.
I always thought, that's one thing I wanted to touch upon briefly too. I always thought auto insurance, no matter who you went through, it didn't matter because it was always the same price.
Until 2008. And then,
so that's when that changed.
Yep. They allowed competitive, Massachusetts to be a competitive state. And that's when we started seeing the Geicos, the Progressives, and all of the commercials, you know, which, to be honest, we see that. I mean, you could be intimidated by that. And in the beginning, we lost 3 to 5 clients a week to Geico. But the reality of the matter is that a discussion that previously really wasn't worth having because it was all the same, as you put it, is now a talking point. It's competitive. Right. So people who are, you know, in the background hearing these bundles and these terms, they're now calling us to see if we have the same. And fortunately for us, we have the same, you know.
Yeah.
I think people find when they actually look at the comparisons that in many cases we're in fact less.
Yeah. It all comes down to two people's preferences, whether one's right or wrong or
Sure.
better or worse. It's, you know, some people like to go online, some people like a personal relationship.
Well,
the point is, though, that you're able to quote it with multiple carriers to find that, number one, the coverage piece of it, and then also the pricing of it.
And there's a lot of great agencies in Beverly, and I think that we as a collective, whether we're talking about it or just doing it, we're all trying to get our online presence up so that we can be the local option, but with an online conduit. Mm-hmm. So I think you'll see, as ours has, websites throughout the community are starting to rise to the times.
Yeah, from my perspective as a real estate agent, also a homeowner here in Beverly, to me it seems, you know, I don't know what the best word, it's confusing to me to be able to decipher what the coverage is, what type of policy I should be getting.
Sure.
So for me to do it online or to not have a contact would seem to be more challenging because I really wouldn't ultimately probably know exactly what type of insurance.
Yeah.
And so that's the other thing about, you know, having a local agency, I would think, to navigate through the insurance with you, and also, not to quote you, give you insurance that you don't need.
Of course.
From my perspective, I always think, are they just selling me this because
you're
going to get an extra whatever,
and
how
that
many
might be your
dollars.
philosophy, but the amount we get paid on the little doodad you buy doesn't impact us enough that we would want to jeopardize the relationship.
Right.
So really, we let the philosophy of the client dictate where we go. Some are high deductible and low coverage. They just want to be covered for the catastrophic loss.
Right.
Some want small things covered along the way. So we really, that's a client-to-client variable that we engage in a personal way.
Yeah.
You're not going to get online.
Right. So let's talk about specifically homeowners. There's a lot that goes into it. There's a lot of different types of homeowners insurance. I mean, I don't know where you want to start as far as, you know, homeowners insurance and what people should look for and those types of things.
I think there's a vast array of types, but I think the most common types to your viewers will be the HO3, which is the owner-occupied insurance policy, the HO4, which is probably more common, the apartment policy, renter's insurance as it's known, and then HO6, which is the condo unit owner's policy. And we should probably just start with apartment because I think it is the most common. Mm-hmm. This is essential coverage that unfortunately most people do not have. Landlords, for the most part, although they should, recommend that this is part of the lease agreement for a lot of reasons that we can talk about, but it's incredibly inexpensive. In fact, in today's competitive environment that we were just discussing, oftentimes the discount on your auto policy for having renter's insurance with the same carrier is enough that your costs don't even net out. Sometimes it nets out less. It's dramatic what these credits do. So at a very minimum, the cost of the renter's insurance is very often reduced or completely stuffed within the existing cost on the auto policy.
I was going to say, so if someone has an auto and they're renting,
yep,
you're pretty much almost getting, if you were the same carrier, you're going to get...
I've literally seen people get refunds after taking tenant's insurance.
Wow.
A couple times. But it's all about that rating factor. It's a percentage discount against the premium. So if somebody's premium is large enough that, a 5 or 10%, depending on the carrier, discount, against the $2,000 policy, that could often cover the cost of the, renter's insurance on average, $150 to $250.
Now, what does it actually cover? I know that you,
sure,
as you mentioned earlier, you can't disclaim you're not going to, you're not the insurance carrier.
Well,
but generally, what does it cover?
It's that the idea of saying what is or isn't covered is often claims adjusters. There's variables that are just far beyond the time we have today. But you can buy the same lines of protection within the policy. Those are essentially available across all carriers, which is, the most part, you're covering your contents. The things you moved into the property on day one, the things you move out. We tell people, shake the apartment upside down. What falls out? That's your contents. So that amount is more often than not $20,000 and up, and it's TVs, literally what falls out. So that's the primary reason people buy renter's insurance. Another big line item in the renter's policy, the HO4, is liability. So
I was just going to ask you about that.
Sure.
Who's covered? The landlord, or the tenant must have some type of responsibility.
They do in some cases, and in all cases, every insurance company, that sniffs that property is going to be brought into the claim. That's just how litigation works. And then slowly, the different layers will show themselves, the different points of cause. Whose neglect was this? Whose, what caused this? Is the tenant required to, by lease, take care of the stairs in the wintertime? Because, in that instance...
It's true. That's a good point,
yeah.
too. Who's responsible for the shoveling?
Right.
I would think if it's a tenant, they may have more liability on someone slips and falls.
What that does is put some from the landlord who ultimately owns this property onto the tenant. But to try to forecast what's going to happen in this litigation, it would be nonsense for us. But the important thing is for $50 of premium, a tenant can have a pool of money so that if a suit does fall and he's responsible, that there's a bucket of money there.
So it's not nearly the same price as the landlord would probably pay.
No, it's less.
And what if the landlord has a different carrier than the tenant?
Both insurance companies will be sitting across the table.
The price would still be significantly lower?
Yeah.
Totally different.
More often than not, a tenant's policy that's adjoined to a landlord's policy that's coincidentally or otherwise the same carrier, those two don't interrelate.
I see.
An insurance company might be more apt to offer tenants to a property or a tenant if they know that they also have the main, but there's very little correlation there. So the tenant should really find the insurance carrier that's best going to represent their needs. Mm-hmm. And but that liability piece is an unknown part of a renter's insurance policy that's really handy to have.
Yeah, I would think so.
Yep. And another piece is loss of use. So, we have a fire at our apartment and we have to go, live in a hotel for a month. There's a coverage in the tenant's policy that'll afford you some of that nightly cost at a hotel, or sometimes it's not even, it might cost more in gas to go stay with my mother in Billerica, so I can put the expenditure for the increased gas. Basically, things that are unusual to my normal day-to-day, you can sometimes recoup through the loss of use.
I see.
Those are some of the main coverages you'd see on a renters. If you move from an apartment into a condo, you basically have the same type of policy.
So this is owning a condo.
Yeah, owning. Yeah. Only in this case, you actually get some coverage for the building. In a tenant's policy, they have no insurable interest in any of the structure. So it's just the underwear drawer, But in this case, it's, I own the interior of this condo. And condo policy is usually, has a master policy. This is all dictated through the condo docs and This is among the more detailed legal work an agent does for its client, is reading those condo docs and deciphering where does the master policy end and where does the unit owner's policy begin. So, whether this is $5,000 or $100, and some banks are now requiring 20% of the entire building needs to be afforded through the HO6 policy for a unit owner within it.
So there may be duplicate insurance, is what you're saying.
Yep, but try to get a current bank to give you a loan and go against their standards, it's impossible.
Right.
We've had clients conform, even we know there was a duplication of coverage. Yep. So
there are other factors involved. You have a mortgage on your property.
Yep.
You may have other
Yep.
stipulations
Sure.
through the lender.
Unfortunately, people who might move into a home that was inherited without a bank or buy a condo cash, sometimes they don't buy these coverages because there's no bank mandating that they do, and that's a real pitfall.
Yeah.
Because this coverage is hundreds of dollars, not thousands in many cases, and the leverage to what you might get at the time of a loss
Right.
is significant. So the HO6 is very similar to the HO4, except it offers some coverage A, dwelling. And then I think the homeowner's policy.
So the single unit, single family
Single, multiple,
policy.
but owner-occupied. I think that's the real important distinction. An owner-occupied policy is an HO3. And that's
the name of the policy?
Yeah.
Those are all the names,
yeah.
the actual names?
Yeah,
Okay.
those are the form numbers.
Yeah.
What that really means is that they're written on an HO3 form, which is this fairly thick legal document that nobody really ever reads, and
Right,
it's really
reading your
important to
insurance
read
policy,
it.
yeah.
There's some snakes in that grass, and that's why
Yeah.
you need an insurance agent to help you navigate it without
Yeah.
getting bit. But the HO3, now that policy there comes with probably the most robust level of coverages. You've got the majority of the premium going into now the dwelling, the actual cost to rebuild, which is an amount that people get to different ways. Sometimes a bank says this is the loan amount, we
Right.
won't accept less. The reality is that an insurance agent uses a process that we use in our office called an RCT. It's residential component technology. And we get in and basically square footage, like kind and quality. We go through a pretty detailed questionnaire.
You have to factor in the labor and everything too, right?
You do. That's actually factored
Yeah.
in. Basically, labor is kind of standardized unless I said this is a custom kitchen. The level of
So you
artisan-
actually need to know, at some point, do you ever, or when, is there an inspection that ever is warranted?
Sure.
Someone has like this, as you just mentioned,
Yeah.
a custom kitchen or exotic stone from
Sure.
a foreign country or something that they don't really necessarily tell you about.
We try to get them to. When they just haphazardly say, oh yeah, it's ordinary, we'll say, okay, so you don't have skylights, so you don't have French doors, so you
see.
don't have any imported marble, so you don't have marble countertops in general. A lot of people, oh, well, yeah, I have that.
Right.
And that's 5,000, 10,000, 3 here in the bathroom, and then you add that up, and there could be a $50,000 coverage deficit at the time of
There's more and more technology now too, I was just thinking, even
yeah.
like,
wired homes, speakers,
Yeah.
security systems.
So
It's
all that
on
stuff,
there.
yeah.
Yep, it's all on the questionnaire. And sometimes we don't have to go through it because we might have the appraisal from a purchase or some other recent data. Sometimes it gets us halfway there, and then
Right.
the question list is less. But yeah, it's really all important, and it could make a big difference in what we give you for coverage, which at the time of a claim could make a big difference in what you're paid.
Right.
We're supposed to make you whole.
Now, I remember at one point, this is going back probably 5 years or so, probably longer than that, I got a visit, I don't know, I'm not even sure if it was the agent or the carrier. I don't even think I was home, but I was notified that my porch needed to be replaced.
Yeah.
I was in the process of replacing it. It was getting
Sure.
definitely older.
So
I
the
think
guy spotted it.
they were concerned that it was unsafe.
Sure.
So they were basically ordered me to,
Yeah.
in a nice way, to
Yeah.
replace the porch. So at one point, what if I didn't, it's a couple questions. So what triggers a visit?
Sure.
And then what if I never replaced the porch?
Yep.
Would they just
Oftentimes,
cancel my insurance?
they would have actually.
Yeah.
Oftentimes, a newly originated policy will then beget the inspection. It's on newer homes or.
Is it like an audit that's random, or is it?
Actually,
Is it happening all the time? We don't even know it's happening.
yes.
People are driving by the house.
The answer to all your questions is yes.
So they don't have to notify you that they're
I
going to
was
do an
literally
inspection.
home one day working from home, and all of a sudden there was a guy in my backyard. Now,
So-
a letter probably went out, and if I argued that it hadn't,
So
they'd argue that it
when
had.
you sign off, are you actually
Yes,
when
the
you
policy-
take the policy,
Yep.
you're allowing them in your yard.
Yep.
So this just brought up a couple things. First of all, I
Sure.
have a young son, and I'm thinking about buying him a trampoline that I never told you about. I just happened to go.
Yep.
We were out one day, we bought it, we brought it back.
Sure.
It was there for 6 months,
Yep.
and now all of a
Be
sudden,
very careful what you say on TV, Jason.
now all of a sudden there was an inspection. They saw the trampoline.
Yeah,
Or,
happens all the time, specifically with trampolines. My neighbors have one. And
So what do they do? Take the trampoline out, or you got to get it covered? Is that
So a few different ways. The letter will probably say take the trampoline out. Some carriers now are comfortable with
I'm
this.
just using trampoline as an example.
It's a really
yeah.
good example because it's so benign. I'm
Yeah.
at the toy store. I said yes
Yeah.
today, and all of a sudden, the most fun toy we've ever had is in the yard. But the neighbor's kids are there when you're home and when you're not. It's what you consider an attractive nuisance in the insurance world. Try to tell
Do you
the
actually have to have those insured, the trampoline, or do they don't insure them? You just pay a higher premium.
In most cases, they don't insure them, which puts you in a higher risk
Really? So that's
category in terms of which companies will work with you. And those companies are often inherently more because they have a broader appetite for risk.
yeah. Will they cancel your coverage if you have?
Yeah.
I don't mean to keep talking about
No, this is
I think
important.
it's an example.
You're shopping for a
because the
trampoline.
next thing I was going to mention was, I don't know what you call it, a high bite, high risk dog.
Sure, yeah.
I mean, there's a long
the
list.
list. There's a whole list. And some
So
of the
now
dogs.
you don't even, you just forgot to register the dog, whatever. The dog never showed up, and then they come. There's a German Shepherd in the yard that
Yeah. Some
now all of a
companies
sudden could
like
cause a
Germans,
problem.
German Shepherds, and some don't. And anything a company does, that's the thing. And it's actually an argument in favor of the big insurance companies. What they're offering you for coverage is a contract, and there are some assumed constants in there. And it's voluntary. Some people have this perception, oh, why do I have insurance if this isn't covered today? Well, the reality is that wasn't in what you purchased. It's
So
a,
let me ask you another
Sure.
thing. Should I be upfront with, or should people be upfront with their insurance
Yeah.
agent? Say, listen, I have a Rottweiler, I have
Totally.
a huge trampoline, I have a swimming pool, I have everything.
Yep, because
And just tell you upfront and
Totally.
get it all.
the
out in
agent
the
can
open?
get you covered. If there's something in there, like an alligator farm in the basement, that you can't get covered, then it might make sense not to have one. So you disclose this to
You
your
just
agent.
disclose it
Yep,
first, yeah.
Because at the time of a claim, when that German, even more than disclosing it, don't ever misrepresent it. Because if you closed in the German Shepherd on the home was to bite somebody the next day, they'll find out pretty quick that you had that Shepherd at your apartment and that you literally lied on your application yesterday, and they'll deny the claim. So more important than full disclosure is don't ever misrepresent.
Yeah. I just want to make sure we mention also that we're not pointing out any type of dog. I certainly.
No,
I'm a
German
dog
Shepherds are a
lover,
good-
But we're talking about the list of.
Yep.
There's many dogs
Many
on
dogs.
the list, and we're giving examples of
Yep.
type of dog.
Shar-Peis are on there, and
So
people
there's-
wouldn't think that.
Yeah.
And when I say on there, every company has a different list. Some companies have no
I didn't
list.
realize. So there's
Yeah.
not like a standard
Nope.
list.
Every company sees it differently.
Now, are there any other pets that are on the list other than a dog?
Dogs are the most common. See, that's the thing. Insurance is driven by statistics. So statistically, there's not a lot of lion cages around Beverly. So it's not on the app.
Yeah.
Okay. So it isn't like but it's the question is, any pets, dogs.
I see.
So
And
the language says pets.
Is swimming pools in the same type of category? That's a real black and white.
Same
you get
list of
covered or you don't
questions.
get covered.
Page 2, and then all the things you may or may not have. Swimming pools are generally fine. Diving boards are frowned upon. A fenced-in pool is almost always okay.
Yeah. Which
Now-
a lot of this too has to do with regulations in the city or town. With
Sure.
to pull a permit for a pool, you have to have it fenced in, and there's a lot
Yep.
of safety issues.
And there's a reason for that.
Right.
It's because they know that the claim that happens in Beverly with an insurance company paying because it was properly coded by having fence is a claim well paid, and
Yep.
injuries get fixed because the money was there. So there's a reason that the city, who has no financial interest in that claim, wants to make sure that their city is largely airtight.
Yeah.
Yeah.
And we have a few more minutes left. So
Sure.
a couple of things I want to make sure we touch on. The first one is homes that are not occupied and what that actually means insurance world.
Yeah.
And then also, which is it's been a topic I know from in real estate. I'm always calling you, or my agents are calling
Sure.
about whether something property's in a flood zone or not.
Yeah.
And how do you get coverage and what's going on with that?
And I'd like to also really touch quickly upon the idea of remodeling. So I'll
Yeah,
fire through
good
those
point,
really quick. The occupancy of a home is really important. That's everything.
So everything's based upon it being owner
depends on the
occupied.
property. Yeah. So for instance,
For a
if you-
homeowner's policy, someone that, you're living there.
Yep, very common. An HO3 assumes is owner occupied. Let's say mom lives there, and mom moves into a nursing home, and that home is now essentially vacant. Okay, while we figure out what to do with mom's house, it's been 60, 90, 120 days, and she's now staying in the nursing home. That house is deemed vacant. And there's a 30 to 60 day, depending on the carrier, provision that when your house is vacant for this duration of time, coverages start falling off to the point where there is very little coverage at all. And this is a simple phone call to your agent, and then they can change the status of that policy. Maybe you're trying to avoid it being deemed vacant and spending more.
Isn't it more money
But what's
for vacant?
Another $1,000 or $2,000 to cover the home, or a $400,000 pitfall when it burns down.
Yeah.
Very important. Again, disclose. We as agents can get you coverage for the things that you've brought into the mix. Disclosure and silence, it might be cheap in your monthly bill, but it's going to hurt you someday if you have a claim.
Yeah.
So I think that occupancy, especially on that home owner occ versus non-owner occupied.
So when is it triggered? After 30 days?
Depends on the carrier. 30 is the minimum. There's a 30-day vacancy clause, and then 60 for some carriers.
I see.
Also, you found a tenant to rent mom's house, and she already has insurance, so we didn't do anything. That's also wrong. It's actually now tenant occupied. It needs to be written on a dwelling fire form, which is a completely separate policy. It does go up a little bit because the tenant's not caring for the house like mom did.
Yeah.
But you're also not covering their contents. So you find that those two amounts offset one another. So occupancy of the house is paramount. If the power runs out now and we don't finish, disclose to your agent who's living in the house and make sure it conforms. I think that remodeling piece is really important. We see this a lot, especially with investors who are putting money into homes. Basically, if you're adding square footage, it's going to increase. If you're replacing decent windows with decent windows, that's not really an insurance item because it's essentially assumed that you have decent windows.
Right.
But if you're putting in some, high grade window that has really different benefits and they're abnormally expensive, you might want to throw them on. Doing the kitchen over, common one. Some of these appliances are outrageous.
Yeah.
They're not what's assumed is there. Marble, countertop, different types of flooring. I think that at the time of a remodel, it's really important. Another thing there is make sure your contractor's insured. There's a whole bunch of things that a contractor could do to hurt your property. You want to make sure they have liability coverage.
Right.
Because there's certain parts of that you might be on the hook for. Really important. And even more so for workers' comp.
You should be getting a certificate of insurance for
Certificate of
anybody who
insurance.
works in your home.
Yeah,
That's a whole nother.
absolutely.
That's a whole nother discussion.
If you ask a contractor for a cert and he can't give it to you, pick up the yellow pages. There's another contractor.
Yeah.
It's really important to make sure you're working with
It's all
insured
about risk.
contractors.
Really, we're talking about risk and
kind of spreading that risk
Yeah.
and sharing that risk a little bit.
Real quick, 1 minute we have left to chat
Sure.
is flood. Any
Flood.
update or what's
Yeah,
happening
it's
with
actually
flood?
really important to know that there are now insurance companies vying for flood business, where the national program will cover houses and neighborhoods on a broad level. We can now, as an agent, represent that your house is a little elevated or some other characteristic makes it less risky, and we can get companies to fight for it in significantly lowering your premium. So
So there's really no issue now that getting flood insurance?
They're even worse because theoretically the world is melting and the water's rising. But there is a competitive market within flood, and that's worth checking with your local agent to
So
find out.
flood has the prices in general have gone up,
The prices will never go
and
down.
more and more people are in a flood zone.
Yeah, because
So you may not have been. Are you seeing cases where somebody wasn't in a flood zone now is in
on
a
a
flood
house
zone?
that's fully owned, no mortgage, nothing's prompting them to check, and they didn't even realize they now
Yeah.
are. The moral of the story: maybe call your agent or us today.
You got to keep in touch. I would think at least when do you think you should talk with your agent? At least once a year,
at least once a year.
or if any major
Yep.
changes.
I
Yeah.
like a nice 20-minute rundown once a year. Yep.
So if somebody wanted to get a hold of you and ask you any
Sure.
questions or further discuss
Sure.
insurance, how do they
We're
get a
easy
hold
to
of you?
find. We're right on Cabot Street, and 922-4600 is our number. Website is archerinsurancinc.com, and you could ask for me, but we're all there ready to fly anytime you need us.
Awesome.
Yeah.
Very, very informative. This has been great.
Yep.
So as always, we want to thank BevCam for helping out and allowing us to do the show, and we thank you for watching. If you have any questions for me, feel free to give me a call, 978-927-6030, or you can visit my website, which is parisellateam.com. We'll see you next time. Thank you.